Hi, it's David Reyes with Reyes Financial Architecture. Thanks for being with me today. I want to give you a market update. It's been a while, and right now it's all about the Federal Reserve. I'm not sure if you've listened or not to the talking heads on the Fox and CNBC, but what's happening now, which is pretty extraordinary, not only has the Federal Reserve been lowering interest rates for the last, in this year, they've cut 2 times, now probably a third in October, which they were tightening up until October when the market lost 20%. So the Federal Reserve has no idea what they're doing right now. And, you know, the market is just super resilient. We're still only about 1 or 2% off all-time highs, but it's unprecedented for the Federal Reserve to go ahead and start reducing interest rates and also adding what's called QE4, basically. They're adding liquidity. They're buying treasury bonds. They're buying short-term treasuries, to be exact, right now. What that does, it allows liquidity in the markets. It allows more cash in the market. So it allows generally the stock market to continue to rise in the short term. So this is, to me, it's insanity, because the fact is you don't do this when markets are healthy. You don't do this type of support of the market when you have markets at all-time highs. And we're at all-time highs. We're at up 330% from 2009, March of 2009. We're just coming off our all-time highs in earnings back in last October. We're probably going to have an earnings recession this year, meaning that earnings could be negative. And we're right smack in the middle of third quarter earnings. So I'm concerned, but I think there's opportunity in the short run. We're not short-term investors here. But the fact is, I think there'll be probably another push up in the stock market before the end of the year, and after that, who knows? We'll be looking at next year's election, those types of things. So one of the things that's kind of new I want to share with you today that we're starting to use what's called a buffered annuity, and we really like it. Basically what it does, it will take, let's say it'll take the first 10% of the losses, and then you get everything underneath that. So for that situation, let's say you get 14% is your maximum rate of return for the S&P that year. So if it goes up 20, you get 14. If it goes up 10, you get 10. But you don't take the first 10% of losses. So if it goes down 20, you lose 10. We have another strategy that I really like that's the same type of thing, except you can lose, the market will, you can lose 20%. The company will take the first 20% of losses, and you'll still get, over a 6-year period, 500% of the S&P 500 returns. So I'll say that again. The product will take the first 20% of losses. It's a 6-year term. It's a no-fee product. You will then get up to 500% of the total return of the market after it absorbs the first 20%. So sounds crazy. Love it. It's a new product. It's a brand new product. So if you want to hear about it, just give me a call, reach out to me. And also, I can't go without saying that we're very proud that we just got on the Amazon bestseller list for our latest book, Mama's Secret Recipe to Successful Retirement. And it was also written with Jack Canfield. For those of you who don't know, he's the Chicken Soup of the Soul author, one of the top authors in the country. It was written by myself and about 20 other advisors across the country. So if you'd like to get a copy, you can go to Amazon.com, or you can actually, if you see me, I'll give you a copy. This is David Reyes. Thank you very much for listening.